Hey guys, Sean from Invest to Live. And man, has it been a crazy week or two of just some wild swings in the markets and some crazy things that we really haven't seen before. There are countless videos out there talking about what's happened with GameStop, AMC, and all the rest. And I'm not going to talk about any of that right now because I think there's plenty of videos on the topic. One thing I did want to talk about is, what do you do when you take a big loss? Are there steps you should be taking? Is there some psychology behind it? What about the tax losses? Can you write something off there as well? I haven't seen a lot about that, so I thought maybe we throw something out there on that topic because, you know what, all is not lost, even if you had a loss. And it's also about the way you bounce back and the way you reflect upon what happened, the decisions you made. Not about justifying them, but just in general, you know, how do you learn from it? How do you move forward from it? I think is really important. So first and foremost, one of the things I really think is important is if you are a new trader or investor, you're relatively inexperienced when it comes time to file your taxes or what to report. The good news is you're going to get a package from whatever broker you're using. I think a lot of people are on Robinhood, but it doesn't matter in general. And they're going to give you sort of your profit and loss for that time period. So it's going to be relatively put together for you. One thing to keep in mind also is just get in the habit of looking things up at like the IRS website or the SEC to understand, you know, if there's certain practices you should be taking or recording or understanding what can happen when it comes time to actually file those profits or losses. So if you're going to hold to the moon and you're going to go diamond hands, hey, have at it, know the risk, know there's downside, and you could take a big loss. If you sold your shares and you recognized a big loss, excuse me, it is absolutely 100% okay to claim those losses, up to $3,000 of tax time. Certainly, I am not an accountant. I don't pretend to be a tax expert, but I will tell you this. The most recent material that I've seen, you can take a loss up to $3,000 as a max against your income taxes when filing with those losses you may have had in the stock market. So no, that's just first and foremost. I'm not going to say that's necessarily a huge amount of money, but that said, it's still something. It's never a total loss. It can still help you come tax time. So that's something to be aware of and something to really keep your mind on that, hey, that's just step one to bouncing back. And what I want to also do is just show you how easy it is to find this information. So I'm just going to share my screen quickly here. Excuse me. And in just a typical browser, oops, I just want to look up IRS investment losses, taxes. Oops, never good when you can't spell. Let's just see. Very top one here, looks like tax topic number 409, short and long-term losses, starts to go into some of the different capital gains rates taxes you might be looking at, how to limit this, and you can sort of see quickly here. I'm not going to read the entire thing because you certainly can do this yourself, but you can see right here that if you happen to have more losses than gains, you can deduct this against your income to the lesser of $3,000 or $15,000 if filing separately. So again, step one, just understand that even the government recognizes that you can lose money investing and trading. They're going to give you somewhat of a break at tax time on that. The other piece that I really thought was important to talk about, especially for folks who are newer to the markets, and even those who are maybe sitting on a relatively large paper loss they haven't taken yet, I think it's really important to understand that how you bounce back and the psychology you apply to your overall investing and trading strategy is really important. And I think there's different rules or trains of thought on this as well. Some folks, when they have a really bad day, they just go into a hole and want to get away from it, take a few days off. Other folks come off a really bad day and they want to go out and have a nice dinner or a few drinks and completely think like it's just business, it's no big deal. And I think it's important to know yourself. And it's also important not to make rash decisions, because one of the things I think that I've just personally seen in my experience is there's been times when maybe I've had a significant loss, or I thought things were going right. I didn't set a hedge up the right way. I didn't have a stop in place, which is a mistake I don't make anymore. And I strongly urge everyone, make sure you're using stops, make sure you're hedging. But with that said, it happens. And sometimes we have things that go way down on us. We don't know what to do, and we got to figure out what to do next. So here's what I think is an important way to look at this. Understand yourself. Understand the way you react to things like this. It might be the first or second time it's ever happened to you. So, you know, it's okay to embrace the way you're feeling. If you feel terrible because you took a huge loss, completely understandable. What you really shouldn't do, and I know that everyone is different, and again, I'm not an investment advisor. I'm not your investment advisor. I don't know your financial situation. So, you know, treat this as just sort of my opinion and not one as someone who's giving you advice. I know that for me, I like to sort of take a step back and understand, what did I do wrong? What did I miss? Did I misplace my stop? Did I not have an aggressive enough hedge against my position? And what I want to make sure I'm not doing is immediately trying to make that money back as quick as possible. Because oftentimes what happens is we'll see prices that'll start to drop down on something like GameStop, merely as an example. And you'll see a little bit of a jump again. It doesn't mean it's not going to go back up. But a lot of times those jumps are reactions to people jumping back in at a lower price, but can still drop a lot more. So where you might want to get back in, make sure, again, you're hedging and protecting yourself against that, just in case it's not what it looks like. You know, I'm not going to do a whole huge video today or talk too much about this, but what I want to leave you with this is, what I want to leave you with is this, and it's pretty simple. Take a step back if things didn't go the way you thought. Don't focus on how much you lost necessarily. Focus on how you feel about it, what you're going to do about how you feel about it, what you can learn from it, what you took from it. Understand both why you got into the trade in the first place, why you're out of it now. Listen, if you're diamond hands and you're holding this thing to the moon, this conversation doesn't matter. But that said, maybe you can take off some of those losses and at least get some advantage of that at tax time anyways. So, you know, two things. Leverage the IRS website to know what you can write off and deduct against your income if you did, in fact, take losses. Also understand that there's a lot that goes into the psychology of how you become a better trader or a better investor overall. And a lot of this has to do with being very cognizant of the fact that things happen. Why did it happen? Why was I in that position? What could I have done differently? And then how do we execute better next time around? And please make sure before you jump back into something that's just crashed, you know the directionality is going to go and where that momentum is as well. So thanks so much. Kind of a disorganized one today, but I just want to get it all out there. So anyways, good trading and good luck out there. Thanks so much.